So if you look at it across the board, it's telling you there's no money flowing in. Look at the growth of stablecoins. It's been stable since the summer, right? So we've got no money coming into the crypto economy. So over time, people need to pay bills, realize stuff, and foundations need to sell tokens and all of those things, and the number go down because we've not had liquidity in the crypto economy. I just don't want to confuse that with it's the death of layer ones. It's nothing's going to work. DeFi is not going to happen. It's like, no, it's just a slow economy right now in crypto land. We've gone through a slow patch. That's how I think about it.
If you've been watching the crypto charts lately, you've probably noticed something. Nothing's really moving. Bitcoin's been hovering, altcoins are sluggish, and even stablecoins, the lifeblood of on-chain liquidity, have barely grown since summer. It's a market that feels tired, drained, and, honestly, confusing. The headlines keep warning that the bull run is over. Some say the ETF hype has faded. Others blame whales cashing out or geopolitical chaos freezing new inflows. But as tempting as it is to believe the party's over, Raoul says we're actually in the quiet before the next explosion. Now, before you roll your eyes, here's the logic. According to Pal, the former Goldman Sachs macro strategist and Real Vision CEO, this isn't a dying bull market. It's a paused one. The crypto economy, as he puts it, is simply going through a slow patch. Liquidity, the oxygen of this entire ecosystem, has been sucked out by a messy mix of government shutdowns, tight financial conditions, and investors temporarily rotating into tech and gold. But the absence of liquidity today doesn't mean the cycle's over. It just means the spring is being coiled. And that's the key to Pal's big thesis. This cycle isn't following the usual 4-year halving script. He's been saying for months that the real peak, the true mania phase, won't come until 2026. Why? Because the drivers of this cycle aren't just Bitcoin halvings anymore. They're global liquidity waves, the same forces that fuel stocks, bonds, and gold. With trillions in government debt rolling over, Fed rate cuts coming, and massive balance sheet expansion on the horizon, Pal believes the crypto market's best days are still ahead. So in today's video, we'll break down Raoul Pal's updated outlook. What's really behind the sideways market, how liquidity explains it all, and why 2026 might just be the year everything changes for Bitcoin and the entire digital asset space. If you find these deep dive market breakdowns helpful, make sure to hit that like button, subscribe, and turn on notifications. It really helps the channel grow and ensures you don't miss the next big market insight.
I mean, there's a real indicator, and I call it the monkeys throwing poo at each other indicators. It's when everybody loses their shit and starts insulting everybody on X. And I get all of these, but you said, and all of this stuff starts happening. And that's reached a crescendo yesterday. And I'm like, yeah, it's probably the bottom. And it kind of happens every time. It's like, but, you know, really, the truth is when you actually kind of filter out the noise, what it is people are so desperate to get ahead. It's a real kind of, right, they all think of this as their one chance. So it's like a serious thing. But, you know, they haven't been around financial markets or volatile assets where you have to learn how to do this. And the way to do it is do nothing and stop worrying about it. But, you know, every day they think that the P&L goes down. It's like my financial future's ruined. It's all over for me. And then the next day they're like, I'm going to be a gazillionaire. I'm going to order a Lambo. It's like, just don't do any of that. I've seen entire hedge funds in the crypto space, because I've got the asset management business that invests in crypto hedge funds, rewriting their mandates to trade equities. And I'm this is a signal, generally speaking. And, you know, when you say, well, why have equities done better? What's going on? Why is crypto underperformed? Why is gold outperformed? It's all based down onto the same everything code framework. So gold is currently, gold used to be real rates. That used to be what gold traded on for a while, for a long period of time. It's now current financial conditions. Financial conditions lead by about 6 months Bitcoin. So when you put those, share the chart on X, it's like a perfect match. Is it going to match perfectly in the end? Who knows? But basically, it's living in the future gold or living in present financial conditions. Equities have been living in liquidity, as have crypto. But since the Fed shutdown and the draining of the reverse repo, there's been issues in the plumbing of the financial system. So liquidity has been drained out. Equities have a bid because everybody's structurally underweight tech stocks. It's a huge problem. I mean, every survey is like record underweight tech stocks, and yet they keep ripping higher. So they're having to chase, and then you've got the 401k flows that come in by the passive investing. But crypto doesn't have that. So what's happened is it suffered from liquidity over this weird period of tightness that's occurred, which was the rebuild of the Treasury General Account and then their inability to drain it because of the government shutdown. They've got nothing to spend the money on. So it just keeps stacking up. It's $960 billion right now, and they can't spend it until the government reopens. And because the reverse repo is empty, there's no other liquidity measure they've got. So lo and behold, repo market blows up or starts showing signs of stress, and the Fed have to step away from QT. Things will change a lot next year. There's a lot to come out of all of this. I'm going to share a chart just because I think it's this one. This is the chart that really kind of matters. It's like the total three, so that's excluding Bitcoin and ETH. Right. So we still haven't gone through where we were peak of the prior cycle, and it's been a slow crawl versus a speedy ramp. And this is because I think it's to do with the debt maturity got extended. So this is like a weird mid-year. Yes, I did imagine it was going to break this on this occasion. When was that? July. I thought in July it was going to break through. Not that I'd do anything about it. And then it had the big puke. But really, a pattern like this usually means that we will eventually have what we want. But it's the patience that's tested everybody. Because this has been a long period where a lot of this stuff has not gone to highs. And even then, it was January that everything else was at its highs, like SUI and everything else. And so everyone's been waiting 11 months or 10 months to have anything.
Now people are calling for the top. And I'm like, this just doesn't feel like a top. Like when people are like this, crashing out every single week, that's not a top. That's not Bitcoin at 110K, like 10%.
No, it's when everybody's on X saying, celebrating each 1,000 rise, Bitcoin feels great at 150,000. I wonder how 151,000. When everybody's doing that kind of stuff, you kind of know that we're getting a bit effervescent. But also, when I look at it in macro terms, is all the macro tops have come with business cycle tops or the business cycle low. They've all come with liquidity tops, liquidity's expanding. And then when you look on a forward basis, we've got the government shutdown to reopen. That's going to open $1 trillion of flow out of the Treasury General Account. We've got Fed rate cuts coming. We've got the changes to the SLR, which is the minimum requirements for banks. We've got potential balance sheet expansion coming. We've got China expanding its balance sheet. We've got the Trump tax cuts to come into place. We've got, the list is endless of liquidity that's to come. And we've got to roll $10 trillion of debt. So my view is we had this extended year, which was this year, because they didn't need to roll the debt because the debt got matured to 5 years. So we just had ongoing liquidity. And I think 2026 is going to be a banner year.
Can I ask?
I still think the end of this, I think November, December are going to be very strong here as well. It's been a stupid easy environment in tech. But yes, the decoupling of NASDAQ from crypto has been interesting, but I think it's explainable. So normally you need to figure out why something is happening and is there real signal there? So one signal may be crypto's topped and everything else is going to fall afterwards. I get it, but I would give that a 20% probability or 30% probability versus crypto's being affected by liquidity at the margin because it's the most influenced by liquidity. And when it comes back, it plays catch up. So the alligator jaws get close to the upside.
Yeah, I'm not worried about that decoupling for a long time. It will come back at some stage. You just don't know if it comes back on the way down or on the way up. Do you know what I mean?
Right. That's right. And you at some point the NASDAQ will need to correct, but structurally, and there used to be a hedge fund who was one of my clients based out of Miami. Every year they come on with the same trade, and every year it worked. And that trade was around about now. They come and buy call spreads and sell downside puts in every major market because the year-end rally effect is real.
You can almost hear the exhaustion in the crypto community. Everyone's frustrated, arguing on X, and questioning whether they picked the wrong asset class. And Raoul Pal actually sees that as a signal, what he jokingly calls his monkey's throwing poo indicator. In his experience, that kind of emotional chaos often happens right near the bottom. When you strip away the noise, he says what's really happening is simple. People are desperate to get ahead. They're comparing their portfolios to friends who bought Nvidia instead of Solana. Hedge funds are rewriting mandates to trade equities because stocks look easier. And that pain, that impatience, that envy, it's part of every long-cycle consolidation. According to Pal, crypto's underperformance isn't because the story's broken. It's because liquidity's been temporarily pulled out of the system. Unlike equities, crypto doesn't have passive 401k inflows or institutional allocation mandates. When liquidity dries up, prices stall. But when it returns, they move violently. And that leads straight to the heart of Pal's macro argument: liquidity. Right now, stablecoin growth has flatlined. The Treasury General account is sitting on nearly $1 trillion, and reverse repo markets are bone dry. That's drained money out of the crypto economy. But Pal doesn't see this as doom. He sees it as a setup. He argues that as soon as the government reopens and liquidity floods back in, with Fed cuts, SLR adjustments, and new fiscal spending, it's going to light a match under risk assets. And when that happens, he says, the same people calling for crypto's death will be the ones chasing the rally. As Pal puts it, this isn't a market collapse. It's just a slow economy in crypto land. And once liquidity flows again, the assets that have been moving sideways the longest, like Ethereum and Solana, could be the ones that explode the hardest.
So if you look at it across the board, it's telling you there's no money flowing in. Look at the growth of stablecoins. It's been stable since the summer. Right, so we've got no money coming into the crypto economy. So over time, people need to pay bills, realize stuff, and foundations need to sell tokens and all of those things, and the number go down because we've not had liquidity in the crypto economy. So I just don't want to confuse that with it's the death of layer ones, it's nothing's going to work, DeFi is not going to happen. It's like, no, it's just a slow economy right now in crypto land. We've gone through a slow patch. That's how I think about it.
There was ETHZilla, which sold 40 million ETH this week, which is the first of the ETH DATs to come in.
I think the big ones
protect its MNAV.
I think the big ones know what they're doing, and the smaller ones could get messy. I mean, I've never liked this DAT trade. In the end, a few people will figure it out, but it's so complicated. If anybody can understand the capital structure of MicroStrategies without some PhD in nuclear physics, I mean, it's so ridiculous. There's no such thing as free money generally, and as soon as people think there's free money, everything goes to shit. And
you were never approached by that. I feel like you would have been.
I got approached by some. I got approached by outside of the ETH and MicroStrategies. I got approached by pretty much every single one.
Yeah, I can imagine.
And to lead them, and I'm like, I'm not going on the board of a US company. I live in the Cayman Islands. It's tax free. I'm not doing that. And also, I'm like, I'm not really comfortable with these. Now, again, they're not terrible, and people will figure it out. But I think we have to go through some pain in these. But also, the DATs are showing you there's not much money flowing into the crypto economy either. So the premium ability has gone down as well. So it's telling us something about liquidity flows in markets.
Yeah, I agree. The DAT is really a speculation trade as well, right? Like when everything starts to trade at like 1.5 to 2 times MNAV, it's when everyone thinks crypto is about to change the world and we're about to do all these crazy things on the equity side of the business. I think it could get a little bit messier with some of these lower quality ones. I do think that luckily all the biggest DATs are trading fine. Like Bitmine is trading fine. SharpLink, I still think is trading okay. I'm talking about relative to their MNAV here, not outright stock price. And MicroStrategy is still trading above 1. It's still trading above 1. So the trade can still go. But yeah, for some of the smaller ones, I saw today that 10% of all of ETH supply has now been bought by the DATs and by the ETFs. How insane is that? And it's still only briefly touched an all-time high. And this trade has really gone on for the last 6 months.
I had a thesis from the last cycle that this cycle would end up having a shortage of ETH because of the burn mechanism. And then if you start locking up ETH like this in vehicles that aren't going to sell very quickly, you end up with a shortage of the stuff. So it gets very convex. So it feels like it could do that. It kind of breaks 5,000 before you know it's trading 10 in like a month.
What is your banana zone prediction now for the next 18 months? You think you similarly think it's going to be a strong
look,
December,
it's very misunderstood. When we talked about the banana zone, we said, okay, the phase 2 starts. It started in April, and it went up. Everything doubled or tripled from then, and then pulled back. And we've got this weird liquidity period. I just think nothing changes. The market, I'm very bullish. I think it goes up a lot over the next 12 months based on liquidity in the Everything Code framework. And so nothing really's changed for me. The only thing that sometimes changes is time horizon. It's like, well, I didn't expect the government to shut down for the longest period in history, but we've got to deal with that. And that means they can't draw down the TGA. Okay, we need to deal with that. But other than that, I mean, when I just look at these markets, let's go share a chart here. SUI, that's my main position still. It's, as you said, it's just been in this, it's a year. It's exactly a year. It's been at the same price. But it went up to 5.5 and it's been down to wherever that got down to, 1.65. But it's just choppy. And when I see patterns like this, usually they resolve higher, 70% of the time. So there's a 30% chance it doesn't and the market's topped and we're all morons. That's fine. I've lived with that before enough times in my life. But when I look at something like that, it looks just pretty obvious. And, Solana, it's just pretty obvious.
Yeah.
To me, it's just, knowing what we know about the macro, looking at those charts, looking at like Ethereum. I mean, these are nice charts.
Yeah, they show ranging for a period of time, which we realize in crypto, you just have to have insane patience because the real gains are made in like 2 or 3 months where you everyone's given up.
And realized volatility in Bitcoin and ETH is like in the 20s and 30s.
Yeah. So
historic vols are super low. Implied vols are actually pretty low as well now, about 40 or whatever. So things like IBIT calls for the year-end rally, talking about
let's do some call spreads.
That's Why right. Not? That's what's in my head. We put some on for GMI last month, but I'm like, I can't see a reason why I wouldn't add to that trade because you buy some calls, you lose a couple of percent. We deal with that every day in the market going up and down. Nobody cares. So you stick in a couple of percent on the IBIT calls. If you get it right, you can make some serious money. Because if you look at the back-end rallies, if they come, it's generally about 100% in it.
What's remarkable about Raoul Pal's framework is that it forces you to zoom out. Instead of obsessing over week-to-week charts, he's asking us to see the market through the lens of global liquidity, the real fuel of every asset boom. And when you do that, things start to make sense. The Fed's about to pivot. The Treasury's about to unleash spending. China is expanding its balance sheet. And the US has $10 trillion in debt to roll over in the next 18 months. All of that, in Pal's view, adds up to one thing: an incoming wall of money. That's why he believes the banana zone, his term for the final, euphoric phase of the cycle, hasn't even started yet. This, right now, is the patience test. It's the period where conviction is built and where the market quietly sets up for the next parabolic leg. If Pal is right, the biggest returns won't come from trying to time the next dip. They'll come from understanding liquidity and staying positioned before it floods back in. So, what do you think? Are we truly in an elongated cycle that won't peak until 2026? Or is this just wishful thinking in a tired market? Drop your thoughts in the comments below. I'd love to hear what you're seeing out there. And if you found value in this breakdown, hit that like button, subscribe to the channel, and share this video with a friend who's losing faith in the bull market. Because if Raoul Pal's right, this story's just getting started. Thanks for watching, and I'll see you in the next one.